today we're going to talk about some exciting data that came out. I think it's exciting because I'm a geek of real estate. I love real estate. And if you've heard me talk about, some of the opportunities and, upside opportunities, downside opportunities, it truly is always an opportunity when you're in the housing market, okay? You're better off in the housing market and not out of it. Hello, this is David Xie with the Xie Mortgage Team. So what data am I talking about? The data I'm talking about is the National Association of Realtors, which is NAR. They actually came out with some data that has shown the first price drop since 2012. That means for the last 11 years, we've had the housing market increasing and not one time did it drop. And even with this drop, it's only a 0.2% drop since 2012. Other countries are being affected by this as well. During COVID, a bunch of countries had values increase significantly. And I think Sweden actually had the biggest drop, and they were at 15% for their entire country. However, now that it's dropped that 15%, it's kind of plateaued because there's definitely a shortage of homes, there's shortage of inventory, and there's still a high demand of buyers, even with the higher interest rates, because everyone sees that, hey, with the interest rates going up, now rent prices are going up because, it's costing more to rent at different places. Small apartments are costing more, room shares are costing more, everything's costing more. So what does this mean for you if you're out in the market looking to buy? I always say it's always a good time to buy, and I'm not just saying this as a sales pitch. I'm actually living proof of it's a good time to buy. So we'll go back to my story, okay? If you watch any of my videos, you'll know my story, okay? I started out in 2006 in the mortgage industry. I purchased my first house right around 8, 9, and then I discovered investment properties, and I was like, wow, this is really good. At first, it was just, flipping houses so that I can, build up cash, and then I started getting cash, and now, I have an opportunity to go into homes and buy it cash that are really distressed and put a little bit of sweat equity, do some repairs on it, rent it out, and then refinance it and take my money back out. It's always a good opportunity to buy because when you buy a home, you can always feel stressed out. Let's just say we buy a house in 2009 and we buy it for 100 grand, okay? That same home today will probably be worth like 150, 250,000, depending on where you buy. There's a lot of different things that affect the home's value: the neighborhood, the school system, where it's located, the proximity to the interstates, the proximity to like major employment opportunities, the condition of the property. Everything really plays into it. With all this, the good news is for existing homeowners, there's lower inventory. That means the values are going to stay up. This is totally opposite from the last couple times that we may have had issues, and we go back to 08 and 09. Everyone was in like more exotic terms such as adjustable rate mortgages, interest onlys, higher rate mortgages. Whereas the last couple of years, a lot of people that had their houses, they were able to refinance into way lower interest rates. And when they refinanced into way lower interest rates, that gave them the ability to kind of stay in the home at a very affordable cost. And if you look out there right now, and let's say you're at a 3% interest, you have two choices. Hey, do I stay put and fix the home that I have up and then enjoy it and then maybe sell it when the interest rates come down? Or I can sell it now, give away my 3% or 2 or 4% interest rate and go to a 5, 6, or 7% interest rate. Well, that's bad news for the home shoppers because, like I said, it's less inventory, but it's good news for the people that are currently owning homes because they have affordable housing. Improving now and enjoying later is definitely something that a lot of people are doing. And this is one way that you could really take advantage and enjoy your home. So when my wife and I, we moved into our house, we really thought about it a lot. Our last house was not what we really wanted, but we were like, hey, we really didn't want to put any improvements into it because we knew we weren't going to stay there. However, when the real estate agent came in, they said, hey, you got to do this, this, and this, and this, right? By the time we were done with the house, we looked at each other and we said, wow, we can't believe this is the house that we're in. Or this was the house that we lived in for the last X amount of years. So when we moved into the new house, we said, hey, we're going to make this house ours. Okay, we're going to pick the paint colors. We're going to do everything the way that we want it. And we've had a really good chance to enjoy the house right now. And even though we have no intentions on selling the house, if that time ever were to come, it's definitely been updated. So we took a house that was in the 80s, brought it into, you know, the mid 2000s. Let's say like 2010, 2015 range. I would think that the improvements should last for the next 10, 15 years. So if you are in a current home, this is a perfect time to take out that cash, whether it be a cash out refinance or home equity line, to improve your house and maybe even pay off some of the higher interest rates debts, because with the interest rates going up, those credit card rates and everything else are increasing as well. To take advantage of the current market conditions, I would say one of the first steps that you really need to do is get qualified. Get qualified, figure out what kind of loan you want. See if you can live with a fixed rate without a buy down. Look at a permanent buy down to see if you can buy points up front to lower the interest rates. Or maybe you can look at something that's a temporary buy down with a like 2-1 buy down, a 1-0 buy down, or a 3-2-1 buy down, where you would be able to benefit with a 3-2-1 buy down rate would be, hey, if the current market rate is 6%, and you do a 3-2-1 buy down, your first year will be a 3% drop in the interest rate, which would take you down to 3%. The second year would be 4% with a 2% buy down, and then the 1% buy down the final year. And then after that third year, you'd go into your fixed rate at 6%. But hopefully during that entire time, you'd be able to potentially look for opportunities where the rates come down and you may be able to refinance. After you get qualified and you figure out your budget and your needs, you're going to now find your real estate agent. Finding a real estate agent is really important, right? You know, you find a real estate agent on the buyer side, typically you're not paying the commission for that real estate agent. The seller's typically paying the commission, unless you sign an agreement saying that you're going to make up the difference if the seller is only paying less than the 3% commission. So make sure you review those terms and talk about that with your real estate agent. In this type of market, you have to be prepared to act quickly. The second you find the property that you absolutely love, it's almost like that comparison, right? You know, you go out, you start shopping for something, and all of a sudden, let's just take a car, for instance, okay? You're shopping for a Toyota Camry, which is one of my favorite cars of all time. And I'm shopping for that Camry, and all of a sudden I go into a dealership and they are like, hey, today only, you're able to get this car at this price, and we have these upgrades in it. And you're like, let me go home and think about it. Well, you go home and think about it, you go back the next day and they're like, oh, I'm sorry, you didn't make that decision yesterday. So now, whenever you look at other Camrys, you're gonna be comparing the price, you're gonna be comparing all the upgrades, so on and so forth. So same thing with a home. You know, you find that home that you absolutely love, be prepared to jump on it, okay? Make sure you have your income, your assets, your liabilities, your credit, all in check. Make sure when you get qualified from that point on until you buy a house, nothing changes in your financial status, nothing goes late, you're not running up credit card bills, because that's the quickest way to drop your credit score. And watch my video below on like some of the things that you need to make sure that you're not doing during the home buying process. And then finally, make sure that you're fully pre-approved, okay? Make sure that you're providing all of your documents to your loan officer, getting your income, your assets, your liabilities. And it's always in twos, okay? So income, assets, and liabilities. The income would be your pay stubs, your W-2s, your 1099s, your award letters, your tax returns, things like that. Your assets are going to be your bank, your savings, your checking, your stocks, bonds, mutual funds, wherever you're taking money out of, and any additional like retirement plans that you may be drawing out of, or stocks or anything like that. Make sure you have all that stuff in line, and you find out what the terms and conditions of withdrawal are on those. And then finally, liabilities is really important. So not only are we looking at the liabilities that are on your credit report, such as your credit cards, your installment loans, your mortgage payments, student loans, things like that, but we're also looking at things that show up on your bank statements that may indicate that you have additional liabilities. So you can't hide those things from us. You got to tell us about those. So when you have those liabilities put together, such as alimony, maintenance, childcare, child support, things like that, we're going to have to know about it. And if you don't tell us about it, we're going to find out about it. There's a lot that goes on in the home buying process. And like I say, time and time again, there's never a bad time to buy real estate, because that's one thing that we absolutely need, okay, is housing, a roof over our head, something that we can call ours, something that's going to help us hopefully gain value over time, or at least give you the ability to potentially earn that equity over time. Not saying that the housing market's always going to go up, but since I've been alive, I can tell you that housing market has gone up. And the best thing to check for yourself is to do this. pull up any property address out there. Go to any of the major websites such as Zillow, Realtor.com, or whatever your choice of like home search engine would be, and look at the home value estimator. Look at how it's moved over time. Go look at the previous sales. Look at what it sold for like 10 years ago, 15 years ago, 20 years ago, and you'll see that, hey, from over a long period of time, as long as you're owning real estate and you're not renting, you're always going to typically gain some sort of money. It's no guarantee. However, I've done really good at it. With that being said, my name is David Xie, and I'm with the Xie Mortgage Team. I would love to help you out, and please just give me a call. I'm just saying. Talk to you later. Bye.